Hello. All right, what's going on, all my unprofitable day traders, my investors who want to make more money, and people who suck at trading? Welcome back to another video. I want to post an education vlog this week before I post an actual vlog because you guys wanted it, and I said, why not? So today we are going to be doing how to swing trade for dummies. So if you've never gone into trading before, I'm not going to go over any basics of like technical analysis or anything, but I will just be going over what you need and then just the strategy kind of as a whole. So before we get into it, let me go ahead and shrink my screen and we'll just kind of start. So off the bat, you guys are probably wondering, what am I using? I use thinkorswim. So thinkorswim is kind of the brother platform to Schwab. So you need Charles Schwab as your broker. Think of it as kind of like the bank account. And then thinkorswim is going to be your designated trading platform, if you will. This is my custom layout. This is my setup. These are my scanners and everything like this. No, you guys cannot have these. These are for my students. I'm sorry. But you guys feel free to use Schwab and thinkorswim. It's free and everything like that. So those are the brokers I use. You can pretty much just go on schwab.com, just make a broker account, just an individual cash account, and then you can just go and download thinkorswim on it as well. It'll just download to your computer, and then it's just the exact same login and ID. That's all you pretty much need. Another question is, do you need a computer for trading? So yes and no. It's kind of two ways. When it comes to scanning for stocks and looking at setups, a computer of some sort is going to be extremely helpful because you need a bigger screen to look at a chart because, you don't want everything super scrunched up. You can look at charts on your phone, but it's going to be really hard to do that. This is kind of what I do. So I look at charts, I scan, I do everything off of my computer. But then when it comes to actually buying and selling stocks, I do that off my phone. So I do the buy and selling and like risk management and stop losses off my phone. But then I look at the charts, I have all my price alerts set, my watch list built, all that's on my computer. So yes and no, you can. It's totally up to you. If you want to trade solely off your phone or an iPad, you can. Just know that it will be a little bit more difficult, but that's kind of that. So yes or no, you can use your phone, but you do kind of need a computer. And then another one, how much money should you start with? So I tell everybody this, it doesn't matter how much money you start with. What really matters is just the education, because no matter what, when you start trading, you will lose money. It's inevitable because you don't know what you're doing yet. So I tell everybody this, take your entire savings, throw it into a trading account and just invest it. And as it's compounding and growing, go and learn off of YouTube, buy a course, buy a mentorship, learn from that in the meantime in paper trade. So by the time you're confident enough, instead of losing money in the market, at least you invested in education. And again, like I said, when you're confident enough, you can go and trade your live capital. And since you invested it, you already kind of know how money moves and you'll have a little bit of extra to play with. So if you do lose some, you'll have a little bit of a cushion. That's how I went about it. That's how you guys should go about it as well. But that being set aside, I think that's all the basic questions. You guys don't really ask that much. But yeah, let's just get straight into it. So the strategy, I've posted 100 of these videos. It's going to be the exact same thing as all of them, just new examples. So this week, I'll show you guys my positions I'm in first. We'll go over them. I'm currently in ASTS, RKLB, and SNDK. I'm super light risk on these. November and December, I did take a hit. They weren't my best trading months ever. So right now I'm kind of just like going low risk. Market's looking better, but it's not guaranteed yet. So I'm still kind of chilled out. So yeah, currently in ASTS, RKLB I got stopped out today for like 0.25%, so really don't care about that. And then SNDK, this one's been running. We took both of these Friday. Or ASTS, I believe, was Thursday. We trimmed it Friday, took like $200 profit, and then stop losses break even. So now this is a risk-free trade. And then SNDK, I'm still full size in this. We're up 1.146K. So not bad for a 2-day trade, 1K in 2 days. I'm not complaining. So let's go over the strategy, every single step of it, and kind of show you guys. We'll go over the strategy and then I'll go over the positions I'm in right now. So off the bat, you guys hear me talk about gauging market conditions. So when it comes to trading breakouts, you need to have bullish market conditions because breakouts will not really sustain if market's not pushing higher. We use indexes like the SPY, QQQ to gauge whether like stocks are doing good or not. And then according to that, this is going to give us the green light to trade or not. This is the rule I break very commonly because we use the SMAs a lot to gauge market conditions. And as they are delayed indicators, we can't go solely based off of them. So gauging market conditions just takes a level of discretion and it just takes time in the market to actually be able to gauge, correctly and know when to trade and when to not trade. And then there's also going to be times where market's really good, but there isn't the most setups. And then there's going to be times where market's horrible, but you will have one of those like one or two superstar setups that have a lot of relative strength and you will make money in a poor market. So just know you want to look at the general overall trend, not necessarily, oh my gosh, the 10 is below the 20 SMA, I can't trade at all. No, don't do that. Don't do that. So what are the three things we look for? We look for the 10, 20, and 50 SMA all stacked up. You want to see them lined up like this and curving higher. We can see anywhere from January, February, March, April into October, we saw a very, very bullish trend. This was like just massive bull run, and then we saw this nasty day right here, and then it's just been choppy ever since. And then finally we're kind of coming out of this chop, we're almost like breaking out, so this looks good. And then also QQQ, I believe, is breaking out as we speak. QQQ is flagging kind of a VCP setup, but oops, yeah, QQQ looks good, SPY looks good. I think market conditions are getting a lot better. So I obviously have the green light to trade. We can see right now 10, 20, 50 stacked up, moving higher. Price action is above the 10 and 20. Price action, gosh, can surf the 10 and 20. Anytime it like retests the 50, you want to be a little bit more cautious. And then whenever price action is below the 50, just probably not going to trade. But like I said earlier, have discretion, because look at this. Price action is below the 50, the 10 was below the 50, and then the 20 was on top. Like, it's all super mangled, but look at this. You have like 1, 2, 3, 4, 5 days of just pure momentum. You can make money during these days. Even though conditions aren't lined up, the price action itself was moving higher, meaning a lot of the stocks are moving higher as well. So that's something you have to look at. But yeah, three main things. SMA's lined up, price action surfing the 10 and 20, and everything is just in a general overall uptrend. So that's the first thing. Once you get the green light, we're going to get into scans. So scans, I have a whole separate video posted about how to actually scan on Finviz, so I'm not going to get too into depth on that. If you guys want to watch it, feel free to just go to my channel. I think it's how to find winning stocks or something like that. It's very simple criteria, but I'll go over the setup we look for. If you guys want to find the criteria on Finviz, go watch that other YouTube video. But moving on, so once we have our scanner criteria, I'm just going to use my 1, 3, and 6 month that I have on Thinkorswim. Okay, there we go. And we basically want to look through all of these until we find a setup. The setup we look for is called a high tight flag, pennant, wedge, bull wedge, I don't care, whatever you want to call it, until we find something like this. So this is minerals, the theme on this, yeah, just gold. Gold's been doing decent, so we can look at this and say, okay, the stock has made a big move, obviously more than 30% in the past 30 days. And it can be, 30% in the past 30, 60 days, around that range. That can tell you that the stock's made a big move. I mean, visually, you can see this thing went from $35 to almost $60 in less than a month. So it tells you it's got a lot of strength. So we can see stock makes a big move to the upside, pulls back to the 10 and 20 SMA, and then creates these higher lows. So we can see it makes a high, makes a low, but this low is higher than the previous one. Higher low, higher low, higher low, creating kind of this support line. And you have resistance, we have lower highs. So high creates a high, creates a low, creates a high, creates a low, creates a high, creates a low. And then what this does is it creates kind of this flag pattern, if you will, this contraction that we see here. We're seeing pressure on the downside, or pressure pushing down, pressure pushing up, forming price action like this. It's like a coil. Expands, gets pushed down, pushed down, pushed down, creating this coil right here. And basically it's telling price action, you have nowhere to go. You got to go somewhere. At the same time, we also want to see volume tapering off. This is obviously not the best example. Just picked a random one from my watch, from the scanner. But you usually want to see volume taper off, just like the setup. And then when the stock actually breaks out, you want to see a surge of high volume. So I'll see if I can find a decent example of that. Okay. What broke out today? Okay, we can use iron. So this is not a textbook flag setup at all. This is more of a base. But when it comes to those breakouts, we can see this volume is higher than average, or higher than the previous averaging days. And we can see it's actually breaking out and it's sustaining, unlike yesterday. Did not sustain. And this thing broke out later in the day, but it's sustaining. Let's see. Any other setups? No. Yeah, I see that one faded. You guys get the gist. You want to see a breakout on high volume. That's going to confirm that it's sustaining. And obviously there's buying pressure. So that's something to look at. But again, high tight flag. This is a good example. CIFR. This is an example of a bigger base. You will have bigger bases, smaller bases. You'll see setups that set up for a couple days, sometimes a week, 2 weeks, 3 weeks. Sometimes you'll see setups over the course of 3 months like this one. You just go on the weekly and then boom, beautiful weekly setup. This one is also a good theme. This is Infotech, data center, something like that. With all the AI news and more processing being done, themes like this are good right now. So big move to the upside. Pull back. Now, it obviously won't pull back to the SMAs because it's such a large base. You're going to see it, float in between. But it made a very large move from $4 to $25. Huge move, couple 100%. Pulls back, higher lows, lower highs, exact same pattern. We're seeing it consolidate, tighten up, tighten up. Volume is also, this one is a better example, tapering off. It's getting tighter, it's getting tighter. And we basically want to put stuff like this on our watch list. We don't want stuff that already broke out. We want stuff that looks like it's ready to break out, if that makes sense. So basically like edging us like, hey, we're almost going to break out. Put us on your watch list, set a price target so that when we do break out, you'll be alerted and then you can buy me. That's kind of what it's telling you to do. So after you go through your 1, 3, and 6 month, your FinViz scans, find, stocks with high relative strength, good setups, top of the themes, just best of the best pretty much. You're going to take these and put them in your weekly watch list. You're going to build your weekly watch list. I do this every single Sunday. And then sometimes people ask me, I was like, why don't I scan every single day? I definitely should. I just don't, because a lot of the times I just don't end up trading it because I only take a few setups a week. And if I have a lot of good setups on my watch list in the beginning of the week, I'm probably just going to take those. But it definitely isn't a bad thing to do like light scans every single day. See if anything pops up on the scanners. But most of the good stuff that you'll find, if you're trading flag setups like this, you will find the flag setups pretty much on Sunday or the week before you trade. So that's kind of my advice. But moving on, build your watch list like this. Looks really good. Make sure, is my mic still on? Hope so. Yeah, we're good. Make sure has a good setup, build our watch list, and then now we're going to wait for entry. So how do you enter the stock? There's a few ways to do this. I'm just going to go over 5-minute opening range highs in this video. It's like the simplest way to say it. So we're going to go over how to enter the stock and how to manage risk properly. So let's see if I can find a decent example. Okay, so NBIS, not a flag setup, but I'll show you guys how you would enter this. So we can see right here, NBIS, stock opened right here, 7:30, boom, the stock opened. And then obviously didn't break out. So this red line here, it's the same line we have on the daily time frame. This would show us that it's breaking out. Mark out your levels on the daily, and then you'll see them on the smaller time frame. So boom, 5-minute candle opens right here. There's nothing. Okay, second 5-minute candle, boom, rips. Okay, we can see it's breaking out. It's starting to peak. Okay, nice. Once the stock breaks out, I'm waiting for this candle. Usually you'll see the first candle break out if it's breakout day, but sometimes you'll have the second candle. It'll be weird like that. It's kind of stupid, but whatever. So the second candle breaks out, and then we have this high right here. Once the stock breaks out of this wick high right here, this candle's wick high, we can see the second candle forms. Boom, takes out the high of this candle. We want the first 5-minute candle or the candle that breaks out to fully form. We're not going to buy it once it touches it. We're going to wait for this to fully form. Once the high of this candle gets taken out by the second candle, the one next to it, that's when we are going to buy. Sometimes it's not always going to be the next one. Maybe, this might have pulled back immediately and then broke out right here, or you could have waited for this confirmation, but just by the book, this is what you're going to want to look for. So bang, we would enter right here at $101.05 or 50 cents. This would be our entry price. And then our stop loss would go at low of day right here at $96.52. So now you're probably wondering, okay, well, how many shares should I buy? How do I know I'm risking properly? You're going to go to your calculator app. Go to your calculator app, and we're going to do this. So it all depends on what your account size is. That's how you're going to kind of manage your risk. But for this, we'll just go off of 10K account. So let's say you have a $10,000 account. 1% of 10K is $100. How do you calculate that? If you're that bad at math, you can do 10,000 times 1% or 0.01. That gives you $100. So you can lose $100 per trade. That is a full 1%. That is the max risk you should. Anything under that, if you want to risk 0.5%, it's $50, 0.25, $25. Very simple math. So let's say you want to risk $100 on this trade. Again, you are going to go here. You're going to take your entry price. So let's say your entry price is $101.50. You're going to take your entry price and subtract it by your stop loss price. Stop loss is always low of day, by the way. Always low of the day you buy the stock. We can see low of day is 96.53. Let's just put 96.5 minus 96.5. That means you have an exactly $5 stop loss. So you have a $5 stop loss from your entry point to your stop loss. Now what you're going to do is you're going to take $100 and divide it by the entry price minus the stop loss price, which was $5 if you can guess. And that would tell us $100 divided by 5, the entry price minus stop loss price, 20 shares. So that means we can buy 20 shares at $101.50. And let's just see how much that would cost. 20 times 101.5. That would cost us $2,030 to buy the stock. So we'd put 2K into this entry right here. And no matter what, if we get stopped out at low of day, we're only going to lose $100 max. So let's say right here, we have 20 shares at $101.50. And then as of right now, you're at $107.50 basically. So let's say we take that same 20 shares times $107.50. Our investment would be worth 2,150, and then your investment was 2,030. So you'd make about a profit of 120 bucks with 2K off a 10K account for a trade that did this in one day, which is pretty good. I would say that is pretty solid because you're already making over 1%. You're already over a 1-to-1 R to R just on the first day. So hypothetically, let's say, okay, cool. You took that trade. You managed your risk properly. You're up 150 bucks. Let's go. I feel like the king of the world. Pre-order the SVJ, bro. What you're going to do now is you are going to hold the stock anywhere from 3 to 5 days after breakout. So you would stay in full size of this. So first day, boom, right here. You're going to wait 1, 2, 3 days to go by. It all depends. You have to use discretion on sell rules. This is kind of the tricky part. This is kind of where time in the game comes in. But we'll go just off the book right now. You're going to wait 3 to 5 days and trim anywhere from 10 to 30% of your position, sometimes 50, depending on, how it's looking. If there's any catalysts or if there's earnings coming up, definitely want to trim. But let's say, okay, 1, 2, 3 days pass by. Let's say it's still moving higher. You're going to trim anywhere from 30 to 50%. And then set your stop loss to break even. After your first trim, where if you trim 10% or 50%, after your first trim, move your stop loss to break even. I always do that. After that, it secures 1, you made money, and 2, it's a risk-free trade. No matter what, even if it comes all the way back down, you'll get stopped for break even. You made a little bit of money, cool, move on. Find the next trade. And let's say you get past that first 3 to 5 days, you trim, set your stop loss to break even, then it's pretty much just a waiting game. You can wait another 2 or 3 days, kind of see where the stock is, maybe trim another 10%, another 20%. Once you get down to the last 10 to 30% of the position, hold it. Hold the entirety of it as long as it's above the 10 SMA. So let's say the 10 SMA is trailing. The day that the stock closes below the 10 SMA, you're going to cut the rest of the position. So if you have 10%, 30%, whatever it is, once the stock closes below the 10 SMA, you cut the rest. And that's why sometimes these stocks can run for days, weeks, months, and you can literally be holding this thing and holding this thing. And then there's also scenarios where, let's say it runs and then it goes sideways. Doesn't close below 10. Jeez, wow, that's embarrassing. Doesn't close below the 10 SMA, but it starts setting up again. It's moving sideways. You can still have 30% of your position, wait for it to set up, and then boom, buy it after it breaks out again. You can add to your position and risk even more now, so you can have a really large position with a really good fill. And then that way you can compound and just continue on. That's like best case scenario. And then the list just goes so on and so forth. But that's pretty much the entire strategy. I'm not gonna lie, it's a very, very simple system. I'll go over again my setup. So this is what I took. This is what I took on Friday. SNDK, again, not a textbook setup whatsoever, but the theme was just amazing with the current news, and I missed the first entry. So boom, 4-hour setup, again, broke out, bought right as it broke out right here, sideways, and then now it's moving higher. SNDK, and then ASTS. This is where I bought it. It was here on, was it? Let me check really quick. I don't remember if it was Thursday or Friday. It was on the 9th. So that was, okay, yeah, Friday. I took that one Friday as well. And I'll show you guys. Yeah, so Friday right here, this is where, no, it was Thursday. Sorry. This is where I bought it. It was this day right here. It failed. And then boom, Friday, I added onto it, ripped here. And then I trimmed, I think I trimmed this day as well too. Bought it this day, added this day, trimmed this day, and then set my stop loss to break even, which is around 90 something right here. All right, we're chilling. 90 something right here. And then now I'm just trailing the rest of I have like 50% of my position left, as you guys can see. And that's pretty much it. So those are my 2 positions right now. Going to continue swinging those. I do have my watch list for the rest of the week. See if there's anything that pops up. But yeah, that's pretty much it. Other than that, that's the strategy. If you guys haven't seen already, January 1st, we actually released JSS, which is my one-on-one mentorship. If you guys are interested in that, if you guys want to learn and everything like that, I'll leave the description or leave the link in my description. You guys can kind of apply, see what it's about, and see if it's a good fit for you. But basically, it's a 3-month mentorship. Goes over everything you need, goes over the strategy. I give you guys all this info for free just because there's no reason to gatekeep it. And then the mentorship is for people who really want to take it a step further, get into the nitty gritty, need my personal help as well. It's not like some course or anything like that. It's just like me personally helping you out. So if that's something you're looking for, feel free to apply. And then of course, JV Trading Academy is included with that. That is kind of our community, if that's what you want to call it. Really fun in there, live trading, all of our trades and everything like that. But that concludes it for today. So I don't think I'm going to edit this at all. I'm going to keep it super raw with you guys. This is the strategy. This is how I trade. Again, if you guys want to apply for JSS, only like 10 spots. I think we're filling up. We have like half of them left or something like that. So feel free to apply for that. And that's pretty much it. So we're at 20 minutes now. Quick and easy swing trading for dummies. Hope you guys have a good rest of your day. Vlog will probably come by the end of the week, and I'll see you guys later. Peace.